On the dividend news, we do have ticker symbol INGR, which hiked its dividend by 2.5%. We also have ticker symbol LRCX, which hiked its dividend by 13%. What's up, everyone? This is Antonio here with you, episode 303 of the portfolio update. So you guys already know it's Sunday. It's time to go over the portfolio, what I bought, what I sold, what dividends came in, and in general, what the portfolio is doing. But guys, in this video, I will be showing you guys that I'm going to continue to stay in the market, continue to see the portfolio continue to grow and grow because of the past results. And yeah, we will see there. But you guys already know we come back every single Sunday, look at the dashboard or this Google Sheets that I do have. We're mainly projected to see how much we make in passive income. This is what the portfolio is projected to make in dividends on a monthly basis, $120.83. Hopefully by the end of the video, we should see this a slight higher because we continue to dollar cost average into the portfolio no matter what the market's doing. But if we do look, guys, we do have goals that keep us focused, keep us disciplined on the portfolio. First one is more towards my channel, and that is to reach 20,000 subscribers. So if you're new to the channel or a returning viewer that hasn't subscribed, consider subscribing with a notification. Costs you nothing, completely free. And if you guys wouldn't mind, drop a big thumbs up on the video. Helps out, supports the channel, costs you nothing, and I definitely appreciate it. Goal number 2 is to make about $130 on average per month in dividends. We're slightly climbing that. We'll see what we end up by the end of the year, but goal number 3 is to reach $140,000 invested of my own money. And if we do look here, guys, we're at $137,751.84. This is actually the total amount of money that I've placed from my personal money in the portfolio. And from this, you'll see that the portfolio is at about $350,000 or so in value. So we've appreciated quite a bit, guys. But this is the total amount that I've actually put from my own money that I've put into the portfolio. Everything has either been dividends or gains that we've taken, or we've just capital appreciation over time from staying in the market. And that's one of the things that I'm trying to tell you guys. I'm going to continue to stay in the market, continue to dollar cost average, and we'll see at those charts right now when we jump back into the portfolio. But we do look here, guys. From the beginning of the year, we have invested so far $10,900, so very close to $11,000 that we are putting back into the portfolio so that it continues to appreciate and continue to grow for us, and you know, create that compounding effect. But you'll see here, we hit the 300K mark at this year, May 12th, 2025, and we're at about 350, so we're getting close to 400, or I guess we're halfway there to 400K. And I've been keeping track of these now, so it's super awesome seeing back, looking at this. Back 2019, we were around $25,000. You can actually, guys, look about 50K. You guys can kind of look at those old YouTube videos, and I've been just showing my progress over the past couple years. And you know, I can't wait to see where we end up and how long it takes us to hit the 100, or I guess the $1 million portfolio value. That is something that I do want to achieve, and I think it's gonna be a super awesome milestone. But if we do look, guys, I'll go ahead and show you guys the portfolio. So as you'll see here, the portfolio is at $350,452.29. We are at the 1 month change, so we are still slightly in the green by 2.52%, which comes out to be about $8,629.11. If we do look at the 3 months, we're up about 12%, almost 13%, which is about $39,000, almost $40,000. On the 6 months, which goes all the way till about March, we're up 24%, about a $68,000 difference there in the green. So we've been staying in the market. That's been paying us off. Since March, we're up that 24%. On the year to date, all the way till January, we're up 25.54%, which is about $71,000. Huge difference, guys. So if you pulled out of the market and had just been holding cash, you guys would have been off about 25%, or I guess from my portfolio about 25%. I would have been out of $71,000 that I could have lost on. So if we do look at the January, we were trading around, or the portfolio was worth about $279,000. Now it's worth $350,000. Guys, we're playing it simple, dollar cost average. And if we do look at the 1 year, guys, all the way from last September, actually, the portfolio was around $270,000. So we only went up about 29%, which is about $79,000. And then on the 2 year change, which is going all the way till September of 2023, the portfolio was trading around $210,000. It's appreciated quite a bit, which is about 66%, which is about $139,000, guys. That we don't have to do anything for that. That's just capital appreciation, dividends, and you know, a lot of patience, a dollar cost average, a lot of discipline. And if we do look here, guys, again, year to date, we are 25%, which is about $71,000. And if we do look at the S&P 500, you'll see if we look at the year to date, it is up 10% or 10.08%. So hopefully you guys are buying back in April. I was buying back on the way down. I've been buying Google and then Alphabet and Meta, and been picking up some pretty good shares. I wish I had had some more capital. I would have deployed more, but we had actually recovered from that, and we're up actually a lot higher now. If we do look at the 5 years, so you guys can kind of see this dip, which was the April you know, tariff scare, was a big buying opportunity for you guys, and as we'll see here back in 2023. So I think it's going to pay off very, very well. It's already paid off some. And if we look at the QQQ year to date, guys, it's up 11.79%. Can't complain with that percentage return, but I'm super awesome happy with the 25%. I am not going to complain about that. And then you'll see again the April, so March, April would have been that great buying opportunity to continue to buy stocks. And then the 5 year, guys, you'll see that this was a huge dip compared, and it was a good buying opportunity to pick up a lot of shares and for the long term. And that's what I've been doing, guys. I've been buying, dollar cost averaging. See pullbacks, I deploy a little bit more money if I do have it, and as well, if we do see markets go up, I'm still continuing to dollar cost average. I'm playing it pretty simple, pretty disciplined, and so far it has been paying off. We'll see what the future has, guys, but I think it'll be a very, very bright future with this if we continue to stay disciplined like this. But if I do show you guys the positions, you'll see that we're at $89,489.84 in the green. That is about 34.29%. We don't really have any cash available, but these are my current positions, guys. Quite mostly heavy in tech, but that's okay because, guys, we are here for the long term, and I actually have quite a lot of years before I even plan to touch this money. So I think the capital appreciation on this will be really awesome from tech compared to like being more conservative stocks. And I think my future self is going to thank me on this, and you'll see all great positions. We have a little bit of SEHD, not too much, and probably once I get pretty much all the tech that I want, then I might move some of the money into SCHD as I dollar cost average. But we will see what the future has here. If we do look at the portfolio performance, you'll see that we are at $130,958.15 in the green. Super awesome to see this trend going upwards. And then that is a return of 62.99%. The projected income we are in the next 12 months is about $1,497.40, which is averaging about $124.78. So not quite a bit, guys, but we're in it for the long term. A lot of our companies are double-digit 5-year CAGR companies, so very, very low dividend yield right now. But in the future, or I guess the past 5 years, they've been raising their dividend by double digits, and we hope to see that in the future, which those raises will compound very, very nicely as well. We're going to be benefiting from the capital appreciation that we do have. And then if we do look here at the history, guys, I do have it to start from the 24th of August all the way till the 30th. Not much activities here. I basically just deposited $200 to dollar cost average to the portfolio. I used those $200. I bought some Google or Alphabet at 208. You guys already know the past couple months I've been picking up Alphabet and Amazon. A little bit or slightly less than half a share of Google is what I was able to purchase. About $100 worth of Amazon bought me at 228, about 0.43 shares. And that was pretty much it for this week. So pretty easy, pretty simple, guys. Again, if we do show you guys here the dashboard on the Google Sheets, I do have a copy of this over here, so we can kind of see how much we grew the dividend snowball. So let's go ahead and actually do that. If we do here, go to settings, we can go ahead and jump over to Empower, which will contain the latest version of my portfolio with all the purchases from this past week. So let's go ahead and jump over there. All right, guys, so we're at Empower on my Schwab account. You'll see this green button. It's called Copy Holdings. Click on it. This copies the content of my portfolio into the clipboard, which then we can jump back over and actually right click, paste special values only, and we have the latest version of my portfolio. If we go to holdings, this is actually an old snapshot of my portfolio from last week. If we go to portfolio tools, update portfolio, this will get wiped. It'll parse out the new stuff we just pasted. So let's go ahead and click on it, give it a second or two, and I guess it's already calculating. Yep, there it goes, guys. And you'll see that looks like it's done. Projected dividend yield still at 0.41%, very, very low. Yield on cost is at 0.56, no change as well. Yearly, we are at $1,450.40. So we did go up slightly, about 38 pennies for the year. On the month, $120.87 compared to $120.83. So we went up about 4 pennies. Again, we're invested, or I guess this past week I bought Google, which has a very low dividend yield, and Amazon does not pay a dividend. So not a huge jump there, but that's okay because we're going to appreciate on that. And then on the week, $27.89 compared to $27.88. That's 1 penny raised there. On the day, we're still at $3.97 hourly. We're still making 17 cents every single hour that goes by. And then hourly work wage, this is if our portfolio was to go work a 40-hour work week, they would get paid an hourly rate of 70 cents per hour. We're going to eventually try to get this to minimum wage. We'll see how long that takes. That'll be a huge, awesome milestone to achieve. But yeah, guys, this is actually all I have for you guys in this video. Don't forget to subscribe with that notification. Help me reach that 20,000 subscriber mark. Definitely would appreciate it as well. If you guys wouldn't mind, drop a big thumbs up on the video. And if you guys stuck all the way to the very end, let me know by dropping a hashtag QQQ, because guys, the QQQ is up well, I guess it's really good. But compared to our portfolio, we are super awesome with that 25% year-to-date return. I'm super happy, cannot complain, and I'm going to continue to do this performance. Hopefully we can keep it up. I'm going to continue to dollar cost average, and long term my future selves will thank me. I will see you guys later. Take care, stay safe out there. Bye, guys.